TD Ameritrade's Investor Movement Index showed its third largest month-to-month percentage increase. So JJ, clients were net buyers, but it felt like it was a much more macro picture this time.
It absolutely was, Jill, because what happened is a lot of the stocks they bought, volatility was also increasing, and part of the formula is volatility, and they bought some options. So overall, even though our clients' reading went up, it wasn't like they bought that many more stocks necessarily. They bought things like Twitter, which lost a quarter of its value after earnings, and volatility kind of exploded in Twitter at the same time. You know, this other social media stocks such as LinkedIn also became a favorite last month. And then some of the, I guess, stalwarts that you would see, including like Disney. So overall, yes, clients were buyers, but as you said, it had a lot to do with what was going on in the market overall.
Well, it's interesting because the trend has been for net buying more of your dividend payers, and we saw that net sellers were actually the dividend payers like your Citigroups, your Microsoft, and so forth. So that was kind of a dynamic shift as well.
It was, and you know, you look at Citigroup, Microsoft, and when GE, that our clients have held for a long time, actually GE for the second month in a row. What's really interesting about that, Jill, is if you remember back at the beginning of the year, those were stocks that our clients were accumulating. They've had nice runs. So I'm encouraged by the fact that they're taking some profits and looking for opportunities elsewhere, and with the looming interest rate rise going over us also, it may make sense for some clients to sell the dividend payers and look for interest rate opportunities elsewhere.
Well, we have you in New York, so I'm totally taking advantage of the fact that I want your opinion on the market overall. Interest rate hikes, what's happening in Greece. It feels as if the market's just been sort of shrugging it off, even though we're seeing some volatility on Monday. Do you really think a 25 basis point interest rate hike is going to make a difference? Because the environment's going to be relatively low for a while anyway.
Right, and that's a great point, Jill, but I think the thing is, the Feds, you know, Ms. Yellen said almost 2 weeks ago that they were going to raise interest rates by the time 2015 goes out. So I think what the market just wants is surety. Tell us a date and we're all going to be happy. The market hates when something's unsure. And so as you said, 25 basis points, I don't think is going to make that big a difference one way or the other. But when they're going to do it, et cetera, is what really has the market on edge. And I think what you're seeing because of that is the market's looking for day-to-day news. Any little piece of data gets maybe more blown up than it should because the market can at least trade on something it knows that.
But overall, do you think the market's relatively healthy outside of interest rates in Greece?
Yes, because if you look, we've been in between, on the S&P 500, we're testing it today, but we've been between 2,080 basically on the downside and 2,130 on the upside since May 7th. We're really in a range-bound market. It's just we've had some big intraday moves. So, you know, for those who are even more long-term investors, don't get caught up in the minutia. And for traders, it's been great because we have had these great intraday moves.
All right. As always, thank you very much, JJ.
Always a pleasure.
For The Street in New York, I'm Jill Malandrino.